Hello, how are you? Welcome back to my channel. Today our topic is about flood insurance. Flood insurance in a world with rising seas. First of all, we will discuss the issue. Flooding is a major cause of damage and property loss to homeowners in the wake of hurricanes. Even absent major weather events, flooding has become an issue for coastal communities like Miami Beach, where rising sea levels and decades of development combined with local characteristics have been increasing flood exposure. Yet most homeowners insurance policies do not cover damage from floods, and the government programs designed to fill this void in flood-prone areas for $23 billion in the red as of 2016. Sea level rise and coastal development mean a higher share of population and higher value of property are at risk of severe flooding. The facts: rising sea levels have increased the risk of coastal flooding over the last few decades, becoming the most economically damaging impact of climate change for many coastal locations. The increasing flood risk has been shown to arise from increased likelihood of tidal flooding in low-lying areas, increased frequency and severity of coastal flooding, and intensification of extreme flooding events. While the risk of flooding has been increasing, so too has the share of population and the value of property at risk in the coastal US. There has been a large increase in population in shoreline countries in the United States. For instance, the population of counties that are susceptible to hurricane damage grew 22% faster than the overall US population between 2000 and 2010, according to a report by the Congressional Budget Office. Due to the lack of availability of flood coverage by private insurance markets, the US government established the National Flood Insurance Program. The goal was to provide affordable flood insurance to encourage homeowners to protect against the risk entailed by living in flood zones. The goal was also to encourage risk reduction efforts by local communities. The program, managed by FEMA, established a detailed flood map that determined the risk faced by each individual property and the resulting insurance premium. The existence of federally subsidized insurance means that homeowners do not bear the full cost of owning a property in an area at high risk of flooding. In theory, if people faced the more expensive premiums that reflects the full flooding risk, they might choose not to build or to buy properties in the high-risk areas. The availability of subsidized flood insurance through the NFIP may have contributed to the increasing older structure in high-risk areas are explicitly subsidized by the federal government according to the Congressional Budget Office. However, the subsidy provided by the federal government is greater to the extent that FEMA estimates of flood risk are outdated or too low. Over the last 2 decades, the NFIP has become burdened with enormous amounts of debt. The program has not generated sufficient funds to full cover losses. This has been exacerbated by several weather events including Katrina, Sandy and Harvey that have generated losses that dwarf those of the 1980s and 1990s. Congress had authorized FEMA to borrow from the US Treasury within certain limits when the NFIP's revenues fell short until the 2005 hurricanes. FEMA has been able to repay the occasional loans. However, as of March 2016, FEMA owned Treasury $23 billion, according to the Government Accountability office which has listed the NFIP in its high risk list as a list of growing imbalance. These are the facts that we discuss about the flooding issues. So it is important to take the flood insurance because there is a high risk of rising seas. Hopefully you understand that why we would discuss these facts of flood insurance. We will meet in next video. See you. Take care. Bye.